everyone, my name is Christian Brooks. I am the owner of Brooks Bookkeeping and Accounting Services, a bookkeeping and tax firm that aims to empower and educate women of color entrepreneurs and small business owners on their business finances and taxes. So today I have a video for you all where I am going to be talking about 4 things that you can implement today to lower your tax liability. So if you're interested, go ahead and hit that like button. And if you want to see more videos like this, hit that subscribe button. Let's get into the video. So last week I gave you all a roadmap, if you will, of things that steps that you need to follow in order to get a zero tax liability consistently or to lower your tax liability consistently. This week I'm going to tell you things that you can implement today in order to decrease your tax liability. So the first thing that you can do is to buy some assets or invest in some assets. Assets hold a lot of tax deductions. For example, if you were to open up a business, you can write off a lot of things or a lot of expenses because of your business. If you have a home office, there are certain home deductions that you can write off on your taxes. If you use your car for business purposes, there are certain vehicle expenses that you can write off on your taxes. If you pay for health insurance and you're self-employed, you can write off your health insurance premiums. So there are a lot of tax benefits to owning a business. Or if you own a home, there are some tax benefits to owning a home. You can write off your mortgage interest. You can write off your property taxes. If you buy a rental property, well, you can depreciate your rental property. All of the expenses associated with your rental property, if you have a property manager, if you have to get the lawn mowed, whatever have you, you can deduct all of those things from your taxes, and that can lead to a lower tax liability. But also, let's not forget about stocks. Your stock portfolio is an asset. So if you sell some stocks and you make a profit, as long as you keep your stocks for longer than a year, then you will be taxed at the capital gains rate, which is a favorable tax rate. Or if you sell your stocks at a loss, well, you are allowed to deduct $3,000 worth of capital loss on your tax returns each year. So either way it goes, it's a tax benefit for you. So invest in some assets, and that can help you to get a lower tax liability. So the second thing that you can do is consider getting other streams of income. So growing up, most of us were told that you go to college, you get a good paying job, and you retire, right? However, your W-2 income or your earned income is going to be taxed at the highest rates, because on earned income, not only are you paying your federal taxes, you're also paying employment taxes. If you have a W-2 job, you're paying 7.65% in Medicare and Social Security taxes. But if you have your own business, if you're self-employed, then you're paying 15.3% in Medicare and Social Security taxes. So your federal tax rate and employment taxes and any state and local taxes. However, there are other forms of income that are taxed differently. For example, I just talked about your capital gains. Capital gains is going to be taxed differently than your earned income. You don't pay employment taxes on capital gains, and as long as you keep it long term, it's taxed at a favorable rate. But then you have other income. You can have passive income. So if you have a rental property, you might want to consider getting more rental properties and building up your passive income, because you don't have to pay employment taxes on passive income. And there's other unearned income, such as dividend income. Maybe when you invest in stocks, think about investing in stocks that pay dividends. Talk to a financial planner about investing in some stocks that pay dividends, because again, dividends, you don't have to pay employment taxes on dividends. So consider other streams of income outside of earned income, which would be your W-2 job and your business, to get some tax savings. So the third thing that you might consider implementing is you might want to move. So a lot of times when we're thinking about lowering our taxes, we're thinking on the federal level, but some of us are paying state and local taxes as well. And there are some states and towns or cities or localities where the taxes are a lot higher than other places. So you might consider moving to a state that doesn't have state taxes, or you might consider moving to a state that has lower tax rates. Or if you want to stay in the same state, do some research and see how much you're paying in local taxes. So the local taxes for different towns or cities within these states are also going to be different. You might want to move to a different city within that state in order to lower your taxes. So the fourth thing that you can implement is be willing to spend money. You're not going to get a zero tax liability. And honestly, if your goal is to build wealth, you are not going to build wealth by hoarding money in your bank account. You need to be willing to spend money strategically so that it is a financial benefit to you. In order to write things off on your taxes, you have to spend money on them first. Right? So if someone is writing off rental property depreciation on their taxes, well, they're just depreciating the amount that they paid for the rental property. If you are deducting expenses for your business on your taxes, these are expenses that you've already paid for. You need to be willing to spend money, but also be willing to spend money on some good financial people in your corner. Get a tax professional, get a financial planner, have some good folks in your corner who can sit down with you and map out a plan so that you can spend your money strategically and build wealth. I hope you find this video helpful. If you find yourself stuck with bookkeeping or taxes, feel free to contact me. My information is in the description box below. And don't forget to hit that subscribe button. I post videos every Wednesday at 12 p.m. where I go over helpful bookkeeping and tax tips for entrepreneurs and small business owners. See you next time.